Well, today's extreme movements in the oil price are a perfect example of how confused everyone's feeling about how much longer this US war with Iran will drag on for. While most of us were sleeping, Brent crude fell sharply, even though Donald Trump was not satisfied with how negotiations are going. But then prices surged after Iran said it attacked a US airbase, but didn't say where. And that was in retaliation for the US launching strikes against an Iranian military site. So a roughly 3% jump in the oil price means people are back to being sceptical about Trump's recent claims that peace negotiations are in their final stages. Now, the price of gold, meanwhile, fell 1.5% to its lowest level in 2 months. And this risk-off sentiment knocked the Aussie dollar down to 71.2 US cents, as well as the local share market, which went down by a pretty steep 1.4%, with the big four banks and miners being the major drag on the ASX today. Similar story overseas, with Asian markets posting hefty falls, though Wall Street hit another record as it finished trading before Iran struck back against America. Now finally, here's a chart from the Reserve Bank which touches on Australia's intergenerational inequality, at least in relation to property investment. Since 2000, the share of younger and middle-aged housing investors has been falling pretty sharply. But for those aged 60 and above, their share has more than doubled to 28%. So it goes to show those who are older and wealthier and able to take advantage of negative gearing, as well as the 50% discount on the capital gains tax, can do all right for themselves. Pity about everyone else. And that's finance.